cost of oil here. So remember what happened here. So they dug up from the oil reserve how much? 30 million. How much is sold? The sold item is, so which is depletion expenses. What did we call that? Depletion expenses is a part of cost of goods sold. So you can also write it down depletion expense. All right. So this is directly added to their cost of goods sold. You can also write it down depletion expense or cost of goods sold. So remember, depletion expense is only recorded for those items which are sold. 1 million barrel are sold. 1 million multiplied by 10 barrel is 10 million. So cost of goods sold or depletion expense to oil inventory. All right. So when you make a T account, inventory increase by 30 million, inventory decrease by 10 million. So balance going to be, of course, 20 million. All right. Remember, depletion is only recorded for sold, not for remaining. Remaining going to be included in inventory. All right. Now accounting for intangible assets. Intangible assets which do not have any physical form, which we cannot touch, we can only feel. For example, special rights, patents, copyrights, franchises. All right. So there are two categories of intangible assets. One who have finite lives and one we have infinite lives. So how we are going to record, the decrease in the value of intangible assets? For finite life, for example, copyrights is for 20 years, they have limited life. Franchise for 10 years or 20 years or 5 years. Patents also for 5 years, 20 years, they have finite lives. So we apply amortization used as straight line method, or we can use it for directly reduce the value. That's it. But for indefinite lives, example is goodwill, company reputation, brand value. Right? If you acquire another company, you have to pay some extra amount of their reputation, of their goodwill, but that goodwill has no definite life. So that life is tested for impairment. That's it. It is not depreciated, it is not amortized, it is not depleted. It is, we call this impairment loss. But there is a test first. If that test fulfills, then we decrease the value of goodwill. Otherwise, we don't decrease the value of goodwill. We remain the same. But first, let's do that. Accounting for finite intangible assets. So, patents granted by federal government give holder exclusive right to sell or produce. So legal life is 20 years, whereas illustration requires here. So Sony pays 170,000 to acquire patents on January 1st, but 20 years. Sorry, for business believe that expected useful life is for 5 years, not entire 20 years. Okay. After 5 years, there's going to be new technology come and they need to buy another patent. Okay, not 20 years. Good. So the amortization expense going to be 170,000 divided by 5,000. Straight line method. There is no salvage value in case of patents because we don't have any physical form. All right. So 170,000 divided by 5. Answer is going to be straight line method. So what is the value here? Patents to cash when we acquire it, and what is the amortization to patents. There is no accumulated amortization expense. There is no contra account for intangible assets. Contra account is only for physical assets. All right. So just expense increase, asset decrease. That's it. Guys, you understand? Oliver, Vanessa?
Yes.
Good. PD, Mirko, Tara, Mina? Okay.
Yes.
Yes, sir.
Good. Copyrights, it has shorter life than, it has shorter life than it would be expected. Copyrights are normally also granted by the government. It has given the exclusive right to produce and sell. It may take 70 years after creator's death. If I invented something and I'm selling something, I can also pass my generations, but extend up to 70 years after I pass. But normally it has short life according to the nature of the contract. So trademarks, similarly, it has a distinct use if you are using the other products. So you have to contract them. Okay, we will be using your brand in our services. So that would be integrated by this trademark or registered or. Okay, so it also used as slogans. So you have seen that in many stuff. Franchise and licensing, these granted by private businesses or government, give purchaser the right to sell the product with specified conditions. So if I am selling the product in Shanghai, I give other person right to sell my product or my name in Beijing. So I sell my franchise or license. All right, franchise normally are for services, for production. We call this license. If I ask my product to be produced by another company with my logo, with my name, they are selling it. We call this license. I give the license to produce. So it includes restaurant chains, sports organizations, and they have infinite life as well. All right. How many years? If you specify, it's okay. If you don't specify, then it's going to be indefinite. Similarly, goodwill, so only recorded when entire company is purchased. You cannot create goodwill for your own business, because when you sell your business, then the goodwill is going to be calculated. The value above you pay for the pay for the cost of the assets, then we call this is goodwill. But before acquisition, you cannot calculate that. So it is defined as the excess of the purchase price of the company over the market value of its net assets. So it represents earning power of the company purchase, and these are not amortized. These are okay. So how we are going to impair? We need to find out first of all a test whether the asset which has infinite life should be reduced or not. So both tangible and intangible assets must be tested yearly for impairment. So it occurs when expected cash flow less than the asset book value. So carrying value adjusted to fair value. Accounting for asset impairment requires two steps. So remember, this can only be done on intangible and intangible and tangible assets. Tangible assets like licenses or plant and machinery as well. All right, but normally this is used for intangible assets. So what are the two steps? Number one, book value must be greater than estimated future cash flow. Right? Book value must be greater than estimated future cash flow. So if we recorded our license and franchise book value is 1 million, and in future they are going to give us 900,000, not 1 million. So first step is completed. If the first step is not completed, then we don't impair the asset. There is no entry for impairment loss. All right. Second, book value minus the fair value, which means if we sell this asset, what, how would be the market value of this asset? All right. So we didn't sell it yet, so we call it fair value. All right. What would be the, what person or what company would offer us the value if we want to sell it? So normally we hire consultants who give us these values. So impairment loss is equal to net book value minus fair value. So it means there are three kinds of values that are going to be tested. Number one, cash flows. Number one, fair value, and book value. Book value is easy, it's on your records. You can find out the book value. This can be calculated through finance formula. How much is the future earnings? You make it present value here, so present cash flows. If the answer is greater, then we go to second step and we hire consultant who gave us, if somebody wants to purchase from us this asset, how much he will offer the market value. You are not planning to sell, just valuing it. So that is called fair value or replacement value. All right. So that would be your impairment loss. So some students, they just minus it, net book value minus future cash flow. That is not impairment loss. That is first condition for impairment. So I have included very nice example here. So we have FedEx, which has a long-term assets with the following information on May 1st, 2012. Net book value is 100 million. Estimated future cash flow is 80 million and fair market is 70 million. So our net book value is 100 million. This 100 million in future gonna give us only the revenue of 80 million. What is our first test? The book value must be greater than estimated cash flow. So 100 million is greater than 80 million. Our first condition is satisfied. Now, asset is impaired. How much is the value? Book value minus, if we sell this long-term assets in the market, it will be acquired at 70 million. So it means net book value 100 minus 70, so is equal to 30 million. So 30 million is the impairment loss. All right. So we will record this impairment loss. So impairment loss with the asset name. Asset decrease credit. So if it would be franchise or licensing, you write down here. If it is some kind of plant, or if it is old plant or something whatsoever, you will write it down its name here. Or goodwill, you will write it down the goodwill here. All right. Loss or expense increase debit. Impairment loss to long-term assets. All right. Guys, you understand? PD, Marco, Phi, Joe Paulo, Taramina.
Yes.
Oliver, Noon, Momo, Miria. Vinish.
Yes, sir.
Yes, sir.
Good. So that's all for our treatment of plant assets, natural resources, and intangible assets. So I would be uploading assignment 7, and remember, it will be submitted before the class, and please make sure all the instruction would be followed. It must be handwritten only, with the exception of using ePen. All right. So if you have any question, you can ask me in our WeChat group, or you can also, message me, and I would be uploading all the relevant material to both platform, WeChat and Blackboard. Okay. See you next time, next week. Until then, stay safe, take care. Bye-bye.
See you, sir.
Thank you for the class, sir.
Thank you.
Bye-bye.
Bye.
Thank you. Bye-bye.